let's say we have a conflicting bias and we want to short, right? And but what market is doing is it's continuing to pump upwards, right? So how can we when can we make sure that it's a good time to look for shorts when the market is clearly long bias, and what is the target that we can kind of anticipate for us to target, right? We'll go over a couple examples of this, but very simply put, the way that I kind of want to explain this and kind of visualize it is, let's say we have market open here, right? And we kind of just continued to push up like this, right? And let's say you were looking for short and you saw maybe like something like this happen, you saw maybe a shift in structure, boom, you tried to short the SIBI, whatever, and boom, you get stopped out just for price to come back down and run that shit later, right? So how do we know when price is going to actually come down, and when are we going to be able to take that long? Exactly, right? Because obviously we can make money going both sides, and obviously we see it all the time, right? Where the market is moving, you know, upwards, and then we want to short. We see a short setup, we get stopped out, and then maybe like a couple minutes later or an hour later, price comes to our drawn liquidity. So how do we make sure that we know we're right, right? And this is the part where time will beat price. Okay, this is the part where time. Oh shit! TradingView updated their shit. It actually looks fucking nice now. Holy shit! This is the part where time beats price here, right? Time usually is a super important factor, and it's not just within the macros here, okay? Right? So let's go over why I mean time is greater than price, right? Let's say, for example, here, right, post news event, right? You were looking to short somewhere to post news, maybe to this low here, right? Just as an example, right? If we're bullish on the day, this we shouldn't be shorting here, right? Why shouldn't we be shorting here? Because this isn't the right time. When do we know is the right time where we can expect us to run some form of sell side, right? And that's going to be at 11:30, okay? 11:30, right? And of course you can front run this by a little bit, right? Maybe you can start seeing your move at 11:15, but the general rule of it is at 11:30, if we are short biased today, right, and we don't really want to take longs, right? Obviously, if you're short biased, you most likely aren't going to want to take longs, right? Because it's going to be kind of conflicting your bias. It's not going to make sense to you. 11:30 is around the time where you're going to want to start taking these shorts, right? Why do I say 11:30? 11:30 is the start of kind of a macro, but not really a macro, but it's called the lunch reversal macro. Okay. And what this lunch reversal macro is going to do is it's going to start to run us some sell side, all right, or buy side, right? And not to be confused by the 11:50 to 12:10 lunch reversal macro, right? This is more of a start of like a kill zone or something, if you want to call it that, right? But it's called the lunch reversal macro. So it starts at 11:30 here. So let's mark out 11:30 on the day right now, right? 11:30 right here, right? And now this is post 11:30, right? Obviously, if your setup is forming maybe a little bit before, maybe 15 minutes before, not a big deal if you want to try and enter in. Just make sure you kind of know exactly what's happening, right? Your highest probability is going to be at this 11:30 mark, right? 11:30, and then you can take it all the way through lunch, right? And then I'm going to mark out that 11:50 to 12:10 macro here, right? As an additional little thing. Okay. So it's here in this. I should just mark out like this right here, right? Another macro here, here, right? This in this time here, this is going to be your best opportunities to look for a. Oops. This is going to be your best opportunity to look for anything that's opposing bias, right? So if you're wanting to short, this is going to be the best time to short, right? In a long bias day. Why is that? Is because 11:30 we're going to see some sort of sell side ran or buy side depending on what that is, right? And obviously, if you try to short any SIBI that's formed this whole leg up, you would have failed, right? But the second 11:30 comes in, you can take any SIBI here and you can at least run it down to this low hanging fruit, right? This sell side objective here, right? Sell side objective here, and then obviously we don't get down to here, right? But you know, something like that, right? This is a Friday lunch PM session, probably not the greatest day, but let's head over to Thursday and we can kind of see if we can see the same thing, right? Or even yeah, let's go Thursday, right? I feel like Thursday would be a good day. Let's see, when did Thursday open up? Thursday opened up here. Okay, yeah. So same thing with Thursday, right? We kind of open up market open here, and then we kind of do a little bit of a run up here, end up getting I think some SMT or whatever here, right? But obviously, right after we see this, we should still be short biased on the day. But let's say we're still long biased and we missed this move here, right? No worries. We're just gonna continue waiting this out, right? If we're long biased and the market is kind of telling us short and we missed this opportunity here, right? We don't have to get back in. We can just wait, right? So as we're waiting, right? Again, our times are 11:30 as a start, right? To look for opposing draws all the way up to 12:10, right? Obviously, you can kind of like go further than this, but this is generally going to be kind of that macro right there, right? Um, Obviously, I mean, it's not kind of the cleanest setup here, right? You don't really get a setup here, but this is generally the place if you wanted to long, you could have longed and it could have worked, right? You could have longed, you could have had your stop loss below this low here, right? And you wouldn't have been ran, unlike every single other time here, right? And at least this time, you actually get some draws hit. I don't know if there was SMT or anything here, but, right? This is the time where we should be looking for longs, and we can kind of look at another day. Let's say we go to Tuesday. Tuesday wasn't really a clear trend day, so we'll just move on from that. Let's see if we can find one for Monday, maybe. Oh yeah, Monday, right? Monday was a clear trend down day, right? We can see, the time wasn't exactly perfect, but again, this is the general time you should be looking for things, right? We're looking for probably at 11:30, maybe a little bit earlier, right? As long as the setup provides, as long as we kind of know what we're getting into, all the way up to this 12:10 here, right? And what kind of liquidity should we be looking for? Should we be aiming for? Right? We should try to just target like the lowest hanging fruit possible, right? Because you're completely fading a bias, right? The bias on a higher time frame. You want to look for the lowest hanging fruit objective, right? So whether that's going to be this one here, right? That gets ran right at 11:30 here, right? Or this one right up here, right? And usually you want to look for the liquidity generated between this 10 o'clock time here, right? So 10 all the way down to 11 here, right? And this is generally the liquidity you want to be targeting when it comes to targeting this, right? And obviously, like I said, you can front run this by around 15 minutes here, right, to try and get your entry, because we know that starting at 11:30, that doesn't mean you're going to get a setup at 11:30 to 12:10 here, right? It just means it's in this time here that we're going to see price run some sort of buy side if we are in a trending down day. Okay, does that make sense? Do we have any kind of questions about that? Any Any other examples you guys want me to go over? Do you want me to go over your trade email?
Yeah, let's go over that trade right now. But yeah, no, definitely pretty much like an in-depth explanation of how to long into shorts, short into long, etc. Um,
Hmm.
yeah, no, the lunch reversal kill zone is something that I wasn't really familiar with, so that's definitely some fucking sauce. Um, yeah, I'll definitely go back and back test that a little bit and just see what it looks like. But oh
Yeah.
yeah,
So yeah, and in
so
my personal like case, if I'm kind of looking for like a and also email, if you can give me like the date and time of that and everything in EST. Um, like usually when I'm trading, right, and I'm looking for like shorts or whatever, and the market's just not giving it to me, then I
mm,
just wait until that 11:30
mm,
right there, right, and then I'm just
yeah.
not. Uh,
Even if you're in like a higher time frame or like a very long trade, that's definitely like a scalp opportunity that you can look to take there.
Yeah, yeah, it's definitely because if you're really not looking for longs, right, it's gonna be hard to like switch your bias
Yeah.
to like look for longs because you're originally short biased and you kind of it's hard to see past that. So when that kind of happens and I kind of recognize that I'm wrong, I'm waiting for that 11:30 ish time. Obviously you can start it a little earlier. Obviously it can
Yeah.
happen a little later, right? Then I'm looking for that time to short, right? And then same thing, when I was talking about the outlook and the outlooks, I was talking about how we're gonna see, or on Friday, we're gonna see some sort of sell side ran,
Mhm.
around lunchtime uh
Yeah.
for last Friday, and that's literally the reason why I said that, because that lunch reversal macro should provide. And if that lunch reversal macro does not provide, then we can expect PM session to just start running the sell side. So if that doesn't work, then obviously we expect PM to run sell side. It's very rare in a case where you're going to see absolutely no sell side ran on the delivery upwards, right?
Mhm.
Or the same thing vice versa, right?
Right, right. It needs to see that
Really
liquidity
rare
to
for that
push
to happen,
higher. Yeah.
right?
It'd be some inefficient price action
Yeah,
for
but
the market to
obviously,
push
right?
higher.
And the kind of idea behind this, right, is that if this is a 1 minute chart, right, you're gonna have some sort of liquidity here, right? And then we're gonna take that, right? And obviously there's gonna be like a 15 minute or whatever to continue higher. Right. So on the 15 minute, it might not, it'll look like we're just gonna come into like an inefficiency or something, but this is kind of what we're kind of working with. And it's a time that's gonna be super important here. So was it Monday, like the third email?
Monday, March 10th.
So how
Yeah.
I would look at it is I would kind of look at let's say this example here, right? The same example where we kind of swept out this sell side here, right? As kind of our low hanging fruit objective, right? Obviously you look for the low hanging fruit, right? Not every single time are you going to be able to get a like generally, like the general rule of thumb is you look for something that was in the 10 o'clock hour, like liquidity in the 10 o'clock hour. But obviously that doesn't have to happen, right? Because what you can look for is you can look for, okay, where can we come into like a 5 minute inefficiency, right? Or like a 15 minute, or like a, 30 minute, right? 30 minute inefficiency, hourly inefficiency. Just look for those stuff like that. And then those are going to be really easy targets for you to target in this, right? But general rule of thumb, especially when it comes to fading the bias, it's really hard to catch like a really good run when you're fading a bias. So that's why I emphasize the point of just taking it off at the low hanging fruit, right? Doesn't matter. It could be a sell side um liquidity pool here, or if your RR is not good enough for a sell side liquidity pool, right? Obviously you can take it off at a discount inefficiency, or at like a premium inefficiency or something like that, right? It's not always the case you're going to get a really nice run down into here. Obviously, there are cases of that happening. Um, probably somewhere. Who knows, right? Probably like somewhere like here, right? We just did a complete reversal here at this around this 11:30 mark, right? 11:30 comes in, you can already take your first BISI that forms kind of here at 11:30, right? And you can ride that up, right? What would be the low hanging fruit objective? It would obviously be this one, right? But what's the main liquidity target we'll be targeting for the launch reversal macro? Like if all goes perfectly, right? It's going to be this inefficiency here, or not inefficiency, this 10:45 high, right? Any high that is made between like the 10 o'clock mark all the way up to the 11 o'clock mark is the one we want to be targeting. Shallow, shallow reversal kill zone, 11:30 to 12:30. Um, like I would mainly emphasize 11:30 to 12:10, right? Because that being the end of the macro. But you could probably run it all the way up until 1:30, right? If you needed to. Like, right? Because this is like the whole, like, if you like think about this as like, okay, this is like the start of the lunch reversal macro here, right? And then this is just lunch, right? And obviously, we don't have to do it here, but it could be generally considered that in lunch, we can also see something here, but you really want to see something form, within this time. But obviously, if this doesn't provide, you can obviously look for lunch, look for that 12:50 to 1:10 macro to provide as well. All right, let's go over your trade example here. It was Monday morning, New York, March 10th, 5 minute chart. Interesting. Okay, so looks like it was here, right? So it looks like you were using this 15-minute as a rejection block. Trying to, I mean, I wouldn't necessarily call this a rejection block. A rejection block more for me would be like this low here as like your rejection block here, right? This would be your rejection block here, right? And then your next rejection block would kind of be down here, right? And then you probably have another one here, right? This, this I would pretty much not consider a rejection block there, right? You kind of want it to be like the low of a run up, right? This is not really the low of a run up, right? It's just a low just to sweep out that liquidity, right? So that's usually not how I want to classify rejection blocks like that. A rejection block is not just a down close candle with a wick. All right, back to this trade here. The Aussie also does it with NZ. Okay, so let's come right into here, right? So coming into the 5, right? Our entry was kind of off that 15 range rejection block, kind of on the low of here. Okay, let's take a look at exactly what happened here, right? Before we kind of start off on anything here, I'm just gonna take a look at the daily chart real quick. Okay, and inefficiency. Okay, 4-hour chart here. Okay. I mean, I don't hate this. Something I would kind of caution you to watch is I'd be like, okay, just careful of this hourly breaker here, right? You got this hourly breaker, right? Hourly inefficiency right here. Okay. With this hourly inefficiency right here, right? So I'd caution you to look at that there, and I'd caution you to look at how this hourly order flow is looking, right? It's generating a lot of low resistance liquidity right here. We can kind of tell that, right? And then it's a high resistance liquidity run up here, which means that eventually we're going to have a low resistance liquidity run down that's going to kind of just obliterate us, right? So let's just keep that in mind here on the hourly. Come into the 15 here. 15-minute looks like you ended up sweeping that high there. And then I think you did have SMT with this high here with the okay, yeah. So this is kind of what I'm looking at, right? We're looking here at the New Zealand dollar, right? The New Zealand dollar took this high already, right? So I would caution for that SMT up there, right? Now, what did we see post this? So this means New Zealand dollar, and this is going to be kind of a little bit of an important SMT lesson here, right? This is an important SMT, a high probability SMT, higher probability than any kind of SMT you're really going to see just in general, right? Let me draw this out all right. So we have the okay, let's say we have the New Zealand dollar here, and then we have the Australian dollar here, right? So what we're looking at here is we saw the New Zealand dollar, right? We saw it take this high here, right? Which is going to be this high. Oh shit, hold on. Gotta make it like this. So it's a little better. There we go. All right. So we saw that we made that high here. So that means we have SMT with this high and this high here, right? So what does this say? This is telling us that the New Zealand dollar is a stronger pair currently, right? Then what we're going to see here, right, is we're going to see, and this is actually one of my models here, so I'm giving you guys one of my models, is we're going to see a shift in strength SMT. Now, what do I mean by shift in strength, right? We know that the New Zealand dollar is a higher, it's a stronger pair currently, right? So we can reasonably expect that it's going to make the higher high in comparison to the Australian dollar. However, here, right, we see a shift in strength, meaning that the Australian dollar ended up going and trading higher without clearing this original SMT. So this is called a switch in strength SMT, or I call it a switch in strength SMT. I can't fucking spell. Okay. Switch in strength SMT. And this is a high probability reversal. Okay. This is a high probability reversal slash SMR, all right, slash smart money reversal here, right? Why is this a high probability SMT, high probability reversal? It's that it's just like a signature telling us for SMT that, this is kind of where we're going to see things happen, right? This is different than it's kind of similar to like stacked SMT in a way where you'll have like stacked SMT like this, and then, like this. Similar, but I put this at a higher scale than the stacked SMT here. Simply because it's showing a shift in strength here, right? It's showing a very strong shift in strength. So this is high probability to come into a reversal here, okay? So knowing that, spin back over to here, right? And let's look at this here, right? This is a prime example of it. Now, we had the SMT here, right? So we know that the New Zealand dollar is a stronger pair currently going up, right? Then we see the New Zealand dollar fail to make the higher high here, right? While on the other hand, we see the Australian dollar make the higher high here. This is our first signal of a switch in strength SMT. Okay. Now, right after that, my personal model is right after you see that switch in strength SMT, you look for a reclaimed civvy or something like that, right? To kind of take, right? So we're just gonna chill here, right? And obviously you don't want to take it too low down, right? So you're just looking at the switch in strength SMT. This should be like your number one sign of this is a reversal happening, right? You look at the hourly, right? We see that we built up all this low resistance. This should just be a quick rundown, right? So I think that was the problem here with this trade. All right, there was a switch in strength SMT, which is a strong kind of reversal kind of SMT area, and then we're kind of also trading within this reclaimed daily civvy here, and as well as this daily inversion gap here, right? So obviously, it's a good idea to draw these like daily inversion gaps, daily civvy, stuff like that, because they're gonna be used like kind of in this lower time frame area here, right? And then obviously we want to draw out the quarters in this area here, right? We can see here we've kind of failed to come above this quarter here, right? So then we can kind of look to take a trade down afterwards or whatever we need to do. Does that kind of make sense, Email? I mean, it's not like the worst idea of a trade, but I would also caution that when you kind of see this buy model and then you already see this high kind of get taken out, right? It's really hard to continue that long up in there.
But then now we're gonna go over some psychology lessons because we have a little bit more to talk about with you guys today.